This is a review of the Johnson Controls trade alert that we posted here at Stock Market Guides. We posted it in our Market Hours Stock Picks service, and this video is going to review how it went. So first of all, this trade was posted on December the 12th, which was a little over a week ago, and you can see that it was designed to be held for a week. And more specifically, the exit time and date would have been December the 19th basically at the opening bell, which is yesterday. So we can now look and see how exactly did this trade perform. Looking at the backtest results for this particular trade setup, this is for a strategy, first of all, called our base pullback trading strategy. And you can see that when this trading pattern is set up in the past for Johnson Controls, this is how the performance looked in backtests. And when you look at it, you look and you might see 56%, and it doesn't sound like a whole lot, but interestingly, that actually over time can be enough for quite a solid edge, depending on exactly how it performs in each of the wins and losses. And in this case, it generated an annualized return of 61.6% in backtests historically across all these trades. So we're going to look at how exactly this trade performed. So it called for an entry. Let's see, it was a real-time alert that was alerted during market hours. So the alert came in 10 minutes after the market opened on December the 12th. And the alert was sent by both email and text. So users can just decide, do they want their trade alerts to come by email or by text? So you get it in whichever way you prefer. So let's take a look. So December the 12th, this is a chart for Johnson Controls. And this right here is December the 12th. And what you may notice is that the price activity got pretty crazy here on this day when the trade was alerted. And the reason is because there was an earnings announcement on that day. That oftentimes can create volatility with the price of stocks. And you can see here that the trade definitely exhibited some volatility. Now, one thing I want to mention is that when you get a trade alert, it's of course up to you whether you even follow the trade or not. And maybe you don't want the volatility that's associated with earnings announcements. And so maybe if you see a trade that's overlapping an earnings date, maybe you simply bypass it. Or maybe you like that sort of volatility and you specifically look for those trade setups. When we post the trade alert, we have a link here that you can click that takes you to a page that shows you what the earnings announcement schedule is for the stock or option that's being alerted. So you could have detected it that way. Anyway, the trade entry called for an entry right around here. Let's see, the price was 53.53 at the time of the alert. And that is, my mouse is right about there right now. So right about here is where the entry occurred and when the alert was sent. And you can see again, the price had a lot of volatility. So it went down and up and down and up. And the trade setup is one where there is no profit target, there is no stop loss, there's just a time limit. And once you get to the time limit, that's when the trade is designed to be closed. Now you can do whatever you want along the way though. You can set up profit targets or stop losses if you want. It's completely up to you. But the way the trade is designed, at least as far as these particular results in the backtest, it's based on simply buying it and holding it until the date shown when the trade expires. And so again, so after the entry here, maybe after the price jumped way back up here, maybe you decided to lock in the profits and make sure to secure the profits. That's totally okay. Or maybe you had a stop loss and you got stopped out right here. With each trade, you never know what you're going to get, right? You can't tell what's going to happen in the future. And so it's up to you whether you want to employ stops or profit targets. But you can see it could have gone a number of ways depending on how exactly you managed the trade. Now, if you just followed the trade alert in lockstep with the way it was meant to be backtested, then the exit would have been at the opening bell, 9:30 a.m. Eastern Standard Time on December the 19th. And so let's check that out. December the 19th is this day right here. So the opening bell, it's 54.11, which is just a little bit higher than 53.53. So it's kind of interesting because there's all this volatility, but by the time the trade ended, you were back in roughly the same spot. It is a bit of a profit. It went up, 50 cents, 50 or 60 cents there. So there was a profit. It did officially lock in a profit, but ultimately you can see that you never know where a trade's going to end, and it can kind of go all over the place before it gets to its finish line. And so that's a reason to stay patient. When you're looking at these trade alerts, you're seeing this history of how these trades have performed for each of these stocks and options that we alert, but it doesn't convey exactly what it's going to feel like along the way with the trade. And you can imagine that if you have a trade that's wiggling all over the place like this, it might be hard to endure if you're kind of hanging on every move. And so there might be some benefit to kind of detaching. Once you've entered the trade, you could consider just kind of detaching, maybe emotionally to some extent, and just allowing it to take its course. And in this case, that would have ended up in a small profit, but each trade is different. So that's it. That's a review of our Johnson Controls trade alert. If you have any questions, you can reach out to us anytime. Our email address is support@stockmarketguides.com.